Good morning. This is Kip with Art Jetter and Company. Welcome to our webinar this fine day. Jeff McClendon from Assurity is going to be discussing hybrid solutions and Start Smart programs here. Tell you a little bit about Jeff. He's the senior sales manager with Assurity Life Insurance Company. In his role, he's responsible for driving profitable revenue growth within this territory. Of course, he earned his bachelor's degree from the University of Missouri, Kansas City. Shortly after graduation, started in the insurance company. He spent 25 years assisting professionals across the country. He currently resides in Kansas City, Missouri, and in his spare time, he likes the outdoors, sports, most of all, spending time with family and friends. If you do have questions, type them into the questions section of the webinar control panel on your screen. We'll get to those at the end. I guess I don't have anything else. Jeff, the floor is yours.
Awesome. Well, good morning, everyone. Thank you so much. There's the contact information for the folks at Jetter, our good friends, and Kip, thank you so much for giving us a platform here to share some good insights and sales ideas with your advisors. So as Kip mentioned, I am Jeff McClendon with Assurity. I am joined by my partner, my internal business partner, Travis Bryan, on this call as well, and we are your support team for Assurity. Today, I'm going to start off by talking a little bit about the company. As a wholesaler in this business for 26 years, the importance to me in the company that represents the products, that's providing the products or the insurance solutions for your customers is very important. So Assurity is a company that's been in business over 130 years. You notice that based off of the slide here, we were voted by Newsweek magazine as best in customer service for a couple years there, and that's one of those things that we look to continue to repeat. Customer service and service overall is very important to us. As a mutual company based in Lincoln, Nebraska, it's kind of at the heart of this company, just taking care of our customers. You do notice, and Kip and I have talked about this, Assurity is a certified B Corporation. And what does that mean? Because I had no clue what a certified B Corp was before I joined Assurity, but I will tell you it is impressive what a certified B Corp means. And it is when we consider every aspect of our business, we put people, the community, and the planet at the same level that we do profit. As an example, and this may not be the best example, but the paper we print our products on, the ink that we use, the technology that we use, the building, we consider the impact that it has on people, community, and the planet when we're doing it. And so becoming a certified B Corporation is something we're very, very happy about. And it's a certification that is near and dear to us, kind of sets us apart. Assurity is an amazing mutual company based out of Lincoln, Nebraska that offers a full portfolio of insurance products. These insurance products include instant decision, and I want to draw your attention to the middle of this slide. Our products, we offer instant decision as well as fully underwritten products to you. Depending on the face amount of the benefit amount is going to determine which route it goes down. But we are a full brokerage company with a plethora of products for you and your customers. We do offer a lot of resources to you, and I would highly recommend, if you aren't already connected with Assurity, from a social media standpoint is beneficial because we do post some really good social media content. And I'm a big fan of steal that content, make it your own, put it in your own words and send it out. But we want to provide you enough insights into the market, into the industry to make your job a little easier and to provide you some content to talk to customers about. Very technology driven. I'd like to say that Assurity is a tech forward company. We use technology in the best way possible, and specifically that's regarding the underwriting process of the insurance transactions that we're going through. So Kip, today's agenda, we're going to talk about 4 different concepts. We're going to start off with Start Smart and full family coverage. We're going to cover a hybrid solution. Like traditionally, hybrid is going to be a life with living benefits or a life with a short-term solution as well, so that term-perm blend. And then we're going to wrap up with a product that is very, very impactful, and that's an accidental death product that I think a lot of people don't necessarily pay attention to.
Jeff?
So with that, yep.
I did get Travis added here, but we maybe lost your screen on my end.
Okay. All right. Let me try this again, Kip, here. Give me 1 second and I'll get reconnected here. I'm not seeing the ability to share my screen anymore, Kip.
All right. I'll fix it. Here we go. Back to you. You should have it.
Okay. Show my screen. Perfect.
My apologies.
No worries. No worries at all. We're good to go. Let me get this. All right, we should be back to square one. So let's start with the Start Smart concept. I'm going to give you the backstory to the Start Smart concept because I think it's very, very relevant. As I mentioned, my internal business partner, Travis, and I have seen a significant interest in this market. But what Start Smart is, it's a 3-in-1 insurance solution that includes life insurance, critical illness, as well as a disability option in the form of income protection. So to start off with, term insurance with Assurity, we do offer your typical term durations, anywhere from 10 to 30 years. We do offer accelerated underwriting up to $1 million of death benefit. And Kip, I'm getting some feedback here. I don't know if we can maybe mute. Sounds like somebody's typing on their keyboard here, so I wanted to make sure and limit the background noise. We do have the living benefits built into this contract in the form of riders. So you do have optional living benefit riders that do not deduct from the death benefit. And that's important because with term insurance, if you have accelerated death benefits, if you have living benefits built in, a lot of the companies out there offer living benefits that are amazing, but they will reduce that ultimate death benefit. With Assurity, we do have the ability to add a critical illness and disability that does not touch the death benefit of the policy. So if a client becomes disabled and they have a term policy, they can get a DI benefit from that term policy that is not going to touch their death benefit. And it still allows them the full conversion options, as you see there on one of those bullet points. It is a streamlined e-app with instant decision. We do instant decision up to $1 million is the max. And you do notice that we do go down to one of the industry low face amounts of $25,000 all the way up to $10 million. So a very robust offering, and processing times are key to us. It's one of the things that we realize as a company that as advisors in the field, you're selling a product to a customer, you're fulfilling their needs. We want to turn this around very quick. So if we take a step back, and Kip and I have talked about this a number of times, kind of the impact that COVID-19 has had on our industry. From my viewpoint, from my desk, what we've seen in the industry is millennials, that demographic of clients. During COVID, they were going out and buying life insurance policies online. There was no Kip or Jeff or Travis or any advisors involved. They were going out online, buying insurance. And even though the process and everything worked great, what we're seeing is the lapse rate on those policies is pretty high. So hear me loud and clear. When there's not an insurance advisor, an insurance expert involved in the transaction, the lapse rates on those policies is very high. And I think, when we're all talking about or all thinking about long-term relationships with clients, that customer retention is important. So millennials went out there, bought insurance. Those policies are already starting to lapse because you and I weren't involved in this process. And so why millennials? Why is this concept so geared towards millennials? Well, number one, they're underinsured. We've seen this data many times, many different presentations, but I think millennial debt demographic is severely underinsured. And that second bullet point there, 78% prefer to have all their insurance policies with one carrier. It's the ease of doing business that is key to this demographic. If they can cover their life insurance, they can cover their health in the form of critical illness, they can cover their health in the form of disability, and they can do it with one product, one policy, and one premium. It's really, really a win-win situation. It's not on the slide, but I'm going to toss out to you why we've kind of focused this on the millennial demographic, and that is because it is the number one buying demographic across the board. There's more millennials out there searching for insurance that have a need for insurance than any other demographic. So that's kind of why this concept resonates with that market. Covering the gap. So when you consider millennials, and I'll take you down the path of a millennial that graduated college, like a lot of us, came out of college with some severe student loans, so you're in debt as soon as you get out of college. Let's just use some round numbers here. $30,000 in student loans. They, of course, buy their first home. They start making some money, buy their first home, so they've got that mortgage. And then they start a family, so they have those childcare costs. The interesting thing is, as millennials, we know that their income is going to increase over time, but there's such a large gap between their debt obligations and their actual income. That gap is what we want to fill, and we want to fill it with a combination of term insurance with critical illness and disability. The beautiful thing about this is it allows them to select the benefit periods. It allows them to select the term periods that match their needs. So what's so smart about Start Smart? Number one, as I mentioned, we're selling to the most active and consumer buying demographic out there. It does offer that protection while their income is low, but their debt is very high because of student loans, mortgage, and all that stuff. The living benefits that I commented on, these do not erode the death benefit of the policy. And it's one application, one premium, and then you have three coverages. One of those bullet points there shows a 70% instant decision percentage on applications. This is near and dear to my heart. The insurance process, a lot of times, is not a fun process. You know, you're getting into clients' personal information, having to ask them some pretty interesting questions about their health history and medications. One of the things that Assurity does is we use data and technology to help underwrite these customers and try to expedite that process to where it's more comfortable for you and your clients. And we have a very, very high percentage of instant decision. For those that are very familiar with underwriting on the insurance side, Assurity does instant decision on term insurance down to around the table 4 range. So this program is not designed just for those that are super healthy. Even with those customers, and Travis and I have seen these, even with those customers that have some medical impairments that are well controlled, you know, we're not talking about anybody that's got some major issues that they're struggling with, but those that are maybe diabetics or have some medical history, but it's well controlled, this program is designed to be able to underwrite and offer them an instant decision very, very fast. So it is easy and affordable coverage. Obviously, it's intended to be able to protect the mortgage, protect that outstanding mortgage debt. But what we have seen in this industry, Kip, is those millennials, a lot of times, they have multiple incomes. They have multiple income sources. So they may be working a full-time job or a part-time job, but on the side, they're doing social media. Maybe they're doing some freelance. That is a demographic that we have seen coming out of COVID, and it makes it difficult from a disability standpoint to underwrite those. We've streamlined the process to be able to underwrite and approve those customers that have multiple sources of income and still provide them a very robust disability benefit. So I'm going to start off after the Start Smart concept, which is the 3-in-1 concept: life, critical illness, and disability. We're going to transition over to what we call full family coverage. Travis, I don't know if you can hear me. Are you on with us today?
Yes, I am. Can you hear me?
All right, I can hear you.
Awesome.
Travis, I would like to hand it over to you at this time. Thanks for joining us. If you wouldn't mind covering the full family coverage, I will hand it over to you.
Absolutely. Thanks, Jeff. Appreciate that. And everybody else joining us today, thank you for your time. We know that you guys have busy schedules, so we appreciate that. But yeah, we wanted to talk a little bit about another concept called the full family coverage plan, and that's utilizing our term product. We also have some other optional riders, as you can see on the screen here, that Jeff had already talked about, those living benefits that don't take away from the death benefit. Great way to really position this product for your client's specific needs. We already talked about the critical illness and the disability income, but today on this one, we're going to talk about the children's term rider and the other insured rider, and kind of show you how that can be combined together to really give you a full family coverage plan. If we can go to the next slide. Yep, perfect. So just to kind of give you an idea, this was a plan that we had put together for Andy. Andy actually works for the company here at Assurity, but he's a graphic designer, just turned 30, married a few years ago, has one child, and they are expecting their second. Does have a small life insurance policy through Assurity, but of course that's not portable. And he wants to ensure his family's taken care of if something should happen to him. So trying to provide coverage for his wife and 2 children. So what we did was we went in and we took out a term life insurance for 30 years for $250,000. Falls below that accelerated amount of $1 million. So we're going to get him that instant decision capability right there. Going to put on that other insured rider that's going to cover his wife. Just so you know, this other insured rider can cover a business partner as well. That's why we call it other insured. But for this instance, we're going to use it to cover the wife. We got her a policy for $250,000 as well for 30 years. And then we're going to take out that children's term rider for $25,000. That's actually going to cover every children in the household that's at least 15 days or older. So once that child is born and becomes 15 days old, it will be covered by this rider as well, and that's $25,000 each. You add that all together, comes out to $74.17 a month for a full family coverage of well over $500,000. That's $250,000 each, and then $25,000 for each child. That's a great solution on one application, one plan, and all you need to do is just have everyone sign that one application and send it in. Get that instant decision, get that turnaround time and the policy in the mail, typically within 48 to 72 hours, as long as they are relatively healthy. Get that instant decision and get them going. So that's a great way to do a family plan. The next one we wanted to talk about was utilizing.
Travis,
oh, go ahead.
Travis, yeah, I have a question for you.
Sure.
So kind of put you on the spot here. So we're talking about 2 insureds, a husband and wife, and we're adding their kids, and we're adding the other insured rider as well as the children's term rider. Does that disqualify them from instant decision? Can we still do instant decision when you have an insured, an other insured, and a child rider?
Absolutely, because it's still below that amount of 1 million. We would still be able to provide instant decision for this plan, even though we have 3 different insureds. The amounts fall below that amount for accelerated and instant decision, so we would be able to provide that for them.
Awesome. That's great news.
Perfect. So Jeff talked about earlier a hybrid type of plan, so we wanted to talk a little bit about what that is. That actually deals with working with our whole life product. And before we get into the concept, I just wanted to talk a little bit about, our product and kind of some of the particulars. But this product is a participating whole life, so dividends are available. Of course, we are a mutual company, so we are in the benefit of the client, not the shareholders. We have that accelerated underwriting and instant decision. Of course, that's going to depend on the age, but basically ages 0 to 17 would be $300,000 and below. We would go to $250,000, $100,000, and then basically for the older ages, $100,000 and below would get you instant decision for that product. We have accelerated benefits like chronic and terminal illness that are automatically built into the policy. So if they become chronically ill or terminally ill, They would have access to that death benefit to use how they see fit. We have different limited pay plans, so they have different options. Of course, we have the pay for life, but if you have some clients that don't want to pay for a policy for the remainder of their life or well into their retirement years, we can do a 10 pay, a 20 pay, or pay to age 65 to help with that. We also offer juvenile or children's policies. Right now, last year we did about 40% of our whole life policies were juvenile policies. So our rates are really good in this arena, and we do see a lot of policies come in for that. And then of course the perm term blend, which we're going to cover, that utilizes that level term rider. So kind of getting into the sales idea. I know most of you out there run into these clients all the time. These are the clients that are very conservative. They're looking for something that's well within their budget, but they also want a product that's going to last their lifetime, right? They don't want to have to deal with a product that's going to end in 20 or 30 years, and then now they're 20 or 30 years older and they're trying to figure out, what policy they can get into that would be able to supply something to pass on to their beneficiaries, but also again remain in their budget now 20 or 30 years later. So what we've come up with, or the idea or sales idea that we have, is utilizing our whole life with the level term rider. So I'm going to go through this scenario and just kind of give you an idea how that works through. But our considerations here with Karen, she's a single mom looking for a stable future for her daughter Zoe, and wants something within her budget, right? Like we talked about, we want to make sure it stays within her budget, but can last longer than 20 or 30 years. She doesn't have a long, doesn't want to deal with a long application process, so definitely wants that accelerated or instant decision to get that through as quick as possible. With the term rider, this will allow Karen to get the policy she wants for the price that she wants. And if something happens to Karen, all those proceeds will pass on to Zoe tax-free. So here's the solution that we came up with. We're going to do a 100,000 whole life policy. We're going to put on the level term rider. We're going to do another 100,000 for 30 years. So it gives her a total of 200,000. And as you can see, the main policy for 100,000, that whole life is going to push her out to age 121. That's going to be $92.74 a month. Throw on that 30-year term rider for $9.57 months for a total of $102.31. And then after 30 years, that's going to drop off, right? The 100,000 for the 30-year term is going to drop off. And then she's going to have a whole life policy that's going to continue on to age 121. Just to let you know, if they had went with a 30-year term for 200,000 and it ended, and then they went to apply for a whole life policy for 100,000 at that age, now at age 60, which is 30 years later, she actually would be paying a little over $624 a month for a $100,000 policy. In this scenario where we did the term rider with the whole life policy, when that 100,000 drops off, because we are a mutual company and we do have dividends available, on the non-guarantee side, that amount actually has grown to about 150,000. So not only have we grown the policy, but when that term drops off, we're almost at exactly 200,000, what they started with, and that will continue to grow as the policy moves on. So we're creating opportunity for the policy to remain with the client till age 121, but we're giving her a little added protection during that 30 years while her daughter Zoe is growing up to make sure that if anything happens, she'll be taken care of. And again, it passes on tax-free to the beneficiary.
And Travis, I think it's important for us to mention that that term rider it carries the full conversion capabilities if you just purchased a traditional term from Assurity. So it has your normal conversion options. So she can select to convert that over to a whole life or universal life product if she wants to. So it does maintain that full conversion capability. And I think that's key here. Is life changes every single year. I mean, it changes month to month. The ability to convert that into a permanent plan and add to her permanent insurance overall is a very beneficial aspect of it.
Absolutely, absolutely.
All right. So I'm going to take back over here. Thank you, Travis, so much. And we're going to finish up with a product and some conceptual markets here that Assurity has seen some substantial growth in, and it's the accidental death and disability market. Candidly, this is a product that is probably not front and center to a lot of us, but I think it should be because it adds so much to our benefits. It adds so much to the value of insurance products to our customers. And what accidental death is, it provides a death benefit in the event that death is caused by an accident. And that's a very general comment, a very general subject, but accidental death products in general are very inexpensive. So what we do is we offer an instant decision, guaranteed issue, accidental death products. What I want you to keep in mind is for your customers, and we all have them, those customers that are not able to obtain traditional life insurance, maybe medically or whatever the issue is, they cannot qualify for traditional insurance. They can get an accidental death product with Assurity, and it's very inexpensive. I ran a quote on a 40-year-old male, and I want to say it was somewhere in the ballpark of $12 to $14 a month for $100,000 of coverage. So very inexpensive, and the fact that it's a guaranteed issue product. So if you're a U.S. citizen, you're alive, and you're not in prison, this is the product for you. So it comes into play, and Travis and I have seen this literally every week. We see this. Customers that are declined for insurance, this is a great solution for them. Customers that work in high-risk occupations, and pay close attention to that, because as we work with customers that are in the construction business, roofers, police officers, EMTs, paramedics, those high-risk occupations, this is really a nice product to add to their portfolio because it does provide a robust benefit at a very, very reasonable rate. Issue ages do go all the way up to age 70, and we do provide coverage up to $350,000. Another thing to keep in mind about this, it is a very quick turnaround time. So that being guaranteed issue, you quote, apply, get an instant decision, that coverage is enforced very, very quick. So the markets that we see for this, young adults just starting out. You come across those clients that are just on a budget. They can't afford term insurance, whole life, whatever it may be. This is a nice solution for them to at least get them some coverage. As I mentioned, the declines for traditional insurance, people that are searching for supplemental coverage in those risky occupations. I have seen over my career here at Assurity, firefighters, police officers, construction workers. We've been working with a lot of tree trimmers, those that are in the forestry business, higher risk occupations that see a true advantage and benefit to having that accidental death is a part of their overall insurance plan. I'm going to finish up, Kip, by announcing that Assurity has announced that our trip to Barcelona is coming up in 2025. This is a trip that you all are eligible for. It is based off production, and my friend Kip and his team at our Jetter & Company can help you out with what the requirements are to qualify for our trip. But we're going to Barcelona in 2025, and Travis and I look forward to being there and meeting a lot of you on this trip. So with that, Kip, I'd like to hand it back to you to see if there's any questions from the field we would be happy to address.
You bet. Thank you. Thank you, Jeff and Travis, for a great presentation. I do have one question here that I know Danielle and I get asked about every day, and that's the turnaround time. How much time is it taking from application to complete the process with you guys?
Yeah, thank you for asking that, Kip. That is, there's a lot of competition out there between companies. Every company out there has great products, and they tout themselves with great service. One of the things that Assurity does very well is process cases very, very quick. So much so that we actually get feedback that cases are approved and issued and enforced before the agent is even aware. And that's a wonderful problem to have. So generally speaking, Kip, on whole life insurance, we turn those cases around, meaning that if they do not get an instant decision, they're reviewed within a day and a half for fully underwritten coverage. With the fully underwritten coverage, our average cycle time is around 14 business days. So you're talking 2 weeks for a fully underwritten case. Based off of my feedback from the industry, that is much quicker than a lot of other carriers out there. We use automated underwriting to the absolute max. So when you submit a client into us, they go through our underwriting portal. We capture all that data, and so when an underwriter gets the case, Kip, they have a lot of data to underwrite it, and that means that we're not going after labs, exams, and APSs on all these cases, and that's truly beneficial. So cycle times are very quick. Instant decision percentage, as Travis mentioned, north of 40%, which is exceptional in this industry. And then if I were to transition over to term, because we talked about term insurance here as well, we have an instant decision percentage on term that's north of 70%. And don't forget that we can do instant decision down to that table 4 range. Not every table 4 is going to pass through, but we have opened the funnel enough to be able to allow your clients to come through that have medical issues and still get an instant decision on a very quick basis. So, yeah, we've got a good thing going here, and that's something we pride ourselves in, being a mutual company based out of Nebraska with exceptional service. And Kip, I've got to mention, every person that you interact with at Assurity is an Assurity employee. We don't outsource any of our business. We don't outsource any of our resources. So if you call into Assurity, you're talking to a wonderful, friendly person in Lincoln, Nebraska that's happy to help you.
All right, great. Thanks, appreciate that. Do have another question here for you. Do you have time?
Yeah, let's do it.
All right. It is, does this policy offer riders for chronic illness and accelerated death benefit? Also,
yep.
Client wishes to buy whole life with this policy. Is it available?
Yep, so our whole life does include a chronic illness, accelerated death benefit, as well as a terminal. Those are built into the coverage, and it is an acceleration of the death benefit. So when I talked about, Kip, when I talked about the Start Smart program, how it's term insurance when we had a critical illness and disability rider, those do not erode the death benefit. On the whole life, the chronic illness is built in, and I love this because it gives the client the ability, if they needed it, to be able to accelerate a portion of that benefit tax-free if they become chronically ill. So that is built in. There's not an additional cost to it.
Great, thank you. That looks like all of the questions, so I think we will wrap this up. Thank you, Jeff and Travis, again for presenting this information to us. We appreciate all of you agents that are on with us as well. If you have any questions, feel free to reach out to Danielle and I don't know if you have that slide, Travis, put on with her email, my email, and phone number. There we go. Agents, we're here to help. So if you need anything, feel free to reach out to us.
Yeah,
you have anything else?
Yeah, I mean, I'll finish up by saying, I mean, you all have been wonderful customers of Assurity for many years, and there's a reason why we continue to do these, is because we try to deliver good concepts and good content to the field, you know, things that are relevant, things that are driving business. And most importantly, and what's important to Travis and I, is what are consumers telling us? Consumers are telling us they want the bundled coverage. They want the perm-term blend. They want the easy, quick, fast solutions, and that's what Assurity is able to provide. So thank you all for your time. Kip and Danielle are wonderful people. They would be happy to help you, and then Travis and I are here to support you as well. So everybody go have a great day. Kip, thank you as always. You take care.
All right. Thanks, everyone. This will conclude the presentation. Y'all have a great day now.